Hello, good day everyone. How are you all today? Welcome back. My name is Hussein. Today is 31st of July, and first of all, I would like to wish all our Muslim clients, and also for those who are celebrating Hari Raya Haji, I wish you all a great time to be spent together on this Raya Qurban. I wish you all a lot of blessing, a lot of more happiness to come. Alright, so let's just have a quick review on the closing of the week review. First of all, I would like to give you an update on that some of the S&P 500 technology stocks. They surprised the market with the earnings beating expectations. Alright, so we had a shares of Apple, which actually we had a share of Apple, Amazon, Facebook, which surged in extended trading on Thursday, right? And also with Alphabet also climbing, and a quarterly earning reports on the big technology stock added fuel to the Wall Street of fourth month rally. So with the four companies reporting on the same day for the first time ever, Apple, Amazon and Facebook each jumped about 5% after the market closed, right? Also Alphabet traded about 0.5% up. Together, the four of nearly a fifth of the, I would say, the four account of for nearly a fifth of the S&P 500 stock market value, right? So index funds tracking the S&P 500 on technology heavy, and Nasdaq rose about 0.8% and also 1.6% respectively, right? So you see that deemed of stay-at-home orders and also winners, as millions of Americans were ordered indoors to contain the COVID-19 pandemic, and shares of the largest US technology companies have actually hit records high in the recent months. At a time when the benchmark S&P 500 is up less than 1% on the year, and the coronavirus pandemic has thrown the economy into its deepest and steepest contraction, right? So Thursday reports reinforce investors' expectation that those deep-pocketed companies will emerge from the coronavirus crisis stronger than the smaller competitors. This is the difference here. When you go for the right companies and when you go for blue chip stocks, so the strong company, they tend to do well. So Apple actually delivered year-on-year revenue gain across every category and in every geography, as consumers working and learning from home during the COVID-19 pandemic turn to its products and services. Also, the iPhone maker announced a 4-for-1 stock split as for the start and of trading on 31st, I guess. Apple stock has surged with 300% since the last stock split in 2014. Amazon also posted the biggest profit in its 26-year history as online sales surged, right? So with the market slowing, advertisement spending due to the economic downturn, Facebook reported an 11% increase in revenue. So all in all, you see, these are some of the companies you see that actually really boosted investor expectation in terms of sales revenue. So tonight when the market opens, you will see a big jump. I would say that if it's maybe another $10 up, around somewhere on there, it will be jumping up all the way up. And also for Apple, it will be bouncing up all the way up. For those who are actually holding Apple stock, congratulations to all of you. You will be seeing it in turning in blue and crossing all the way above 400 or close to 400, right? For Amazon, you can expect the same, more or less a similar move that will be pushing the stock all the way up. All right, now having a look at or having a discussion about American dollar. All right, let me just show you. This is GBP USD that has been strengthening strongly due to the weakness of American dollar. We saw GDP contraction about to 32% down, and also this has never been seen in the history since 1921. So you see that economy is I would say that in a deepest the depression. This is why US dollar has been weakening. But you see, all in all, they're still waiting for hopes that they will introduce a few trillion package to the economy that will give the confidence to buy back the dollar. But for now, temporarily, we see that US dollar has been weakening, and many of the traders, many of the investors are actually stuck in those positions because if let's say some of the major currency pairs, this is the reason that you see now. But I would see that next week there could be sort of a correction coming up, because you see this pair, just an example, GBP USD is already overbought. So we need to hear some sort of a good news for American dollar, which will be making the dollar stronger for it to bring it back its correction. Now for GBP USD, we had a forecast for it to the upside, but this could be a correction coming next week. So we're going to wait and see for any further adjustment or any sort of price action analysis that will be coming up. For Euro USD, which also trended higher, extremely higher, this is due to the weakness of American dollar. Why? Because what is happening in US now, maybe it happened around 100 years ago. So this is something which is unexpected, in terms of this corona stuffs and all that, and daily cases rising. But you see, this is what happened in financial markets. There's always a good news, there's always a bad news, but I still see that for Euro USD, for GBP, there will be a correction coming soon. So we just got to be patient a bit for those who are actually holding position in Euro USD for it to rebound. But let's just see from here what the next week candle is going to be, because from here this has also reached to a very major resistance from where it will be making its correction soon. Alright, so all in all, we're gonna wait and see first how is it going to be for next week. Any updates come by, we will be sharing with you on our daily forecast webinars. And also on other than that, we had a Federal Reserve meeting this week. They also highlighted on that they will do as much as they can to stabilize the economy, to get through this pandemic over longer term. So all in all, there were a few things like earnings beat expectations, US dollar became more weaker, GDP contraction up to 32%, Federal Reserve meeting. All in all, it was a very busy and volatile week. Alright, so I would like to say thank you very much for being with us, for allowing us to share with you more and more updates. Right, as for now, I will be signing off, and we will be coming back again next week with more updates, with more weekly analysis, our live webinars, right, whereby you will be learning more and staying connected with us on day-to-day basis. Alright, so thank you very much, and have a great holidays.